All right, greetings, friends. Weston Nakamura from across the spread in Tokyo. So, I have something completely different from my usual content of market commentary for you. I just gave a presentation a few days ago as a guest speaker for the investment club at Temple University's Japan campus, which was a great honor to be invited to do so. And so I was asked to talk about markets, about trading, and also discuss my own background, my own career path, and then also give some career advice from my perspective for those looking to enter the finance industry as a career and even mid-career, like who are already in finance. And so I wanted to share that all with you as well today for this video. Because, as you can imagine, I had a lot to say, and none of what I said was anywhere near what you would typically hear or expect to hear at any such event, or just hear in general.
It's not about me. I want to apply this to you guys and show you a different angle, a different world that you are not, like I said, you are not going to hear about this from traditional means. It is my duty, personally, to tell you about these other alternative pathways, and that there is no such thing as a cookie cutter way into finance and around finance and financial markets themselves. All right?
Basically, I approach this in the exact same manner and intent as I do with my market commentary that I publish. Because the reason that I accepted this invite, and again, I was very thrilled and honored to do so, but the only reason is because I felt that I have a unique take and message to convey, given my very highly unusual background and entrance into institutional finance, starting at age 28, getting it to the Goldman listed derivatives trading desk, from starting with zero experience prior and zero academic credentials to do so. Given like all of that, as well as my time spent within institutional finance and then thereafter, I obviously have a differentiated message that isn't being conveyed out there. And it's also a very critical message to deliver, and that needs to be heard by this group or by anyone really, about how that there is a different path. I'm living proof of there is not some sort of structured path for finance, or for anything for that matter, and especially not for markets and trading. Okay? So, controversial or unorthodox as it may be, I don't care. It needs to be heard and said for those very reasons. And I truly felt that it is my duty to tell people what they'll likely never hear, especially from the traditional channels. And it's not because the other people have like bad intentions of withholding information. It's just that everyone's going off of their own experiences. My experience happens to be very different. Hence, this is going to be a very differentiated viewpoint, a minority viewpoint, but still one that needs to be conveyed. Okay. And so that's why I say it's like my approach to market content that I put out there. It's the differentiation combined with the need and importance that makes it worthy to put out to the audience in the first place, right? Anything short of those, it doesn't make the cut for your attention. Someone who had been, I guess, a fan follower of my content actually said, after hearing this presentation of mine that you're about to see, that they said that it was like a live version of an episode of like Across the Spread podcast or something like that. And so I broke up my presentation into three general topics. Number one, again, my very highly unusual background story into finance. Number two, my personal framework and approach in trading and investing into markets. And then number three, career advice for the finance industry in an era of perpetual disruption and change. And so I took that second topic, the one about trading markets, risk management, and all that, to share with everybody. This is an audio recording of my presentation, as I didn't film this event on video, but when I was in front of the room throughout the entire time, I had used a slide deck to present alongside, which I reference off of throughout the entire presentation. And so I have the audio track and I included my slide deck as a visual. Okay, so I suggest that you keep your eyes on the video, even though I'm not physically in it. I'm just going to start off here by explaining the setup of how I kicked off my presentation and then just go right into it. And the way that I did so was by showing this 60-second video clip that you're about to see of Charlie Rose from 2014 interviewing Lloyd Blankfein, who was the then chairman and CEO of Goldman Sachs. And this particular clip that I'm about to show you, that I kick off my speech at Temple University with, this is where the core theme of my presentation and really my overall like broad framework on markets, on career path, on life comes from, about contingency planning. That had such an immediate, it stuck with me, and it had left such a deep impression, such that I have since used it and referenced it over and over again with every single intern or new grad hire or whoever it is that I personally had encountered during my institutional days, as well as anyone that I've ever mentored in markets thereafter. And now here we are a decade later, I'm still referencing this clip. That's how profound of an impact it had on me. It still continues to have on me. So without further ado, here is Lloyd Blankfein on Charlie Rose from 2014, and then right into my presentation to the investment club at Temple University, Japan.
How far out into the future do you think you can see?
Well, I'm in the risk management business, so I don't take it for granted that I can see behind. I don't think I can see 4 inches into the future. Yeah. I'd say that most of my...
But your firm has a reputation of being pretty good at understanding the future and being able to make some analysis as to about what risk to take.
Well, I'll confess to you that what I think we aspire to is less foresee the future and more be a great contingency planner. And sometimes you contingency plan really well and you can respond very fast to what's happening because you thought through all the possibilities, you can get off the mark so quickly it looks like you false started. It looks like you anticipated the start when all you've really done was listen so closely and knew what you were going to do that you got off the mark quickly. I think it's hard enough to predict the present. Yeah. You know, think about it, perspective. It's very hard to step out of your context and see what is happening. I have views about the future, but I'll tell you, we're not in the business. You wouldn't be a very good risk manager if you let what you think was going to happen have too great an influence on what you plan for and protected against. What we really do is we really contingency plan. What might happen, what could happen.
Charlie Rose, as you mentioned, he's not like an idiot.
How far out into the future do you think you can see?
He's a smart guy.
Well, I'm in the risk management business, so I don't take
it for granted that I can see. How far in the future do you think you could see? I mean, come on, that's like a kindergarten type of question, right? But that's the level of what the perception is, what people think trading is about. And what does he say? He says that you can't predict the future, you can't predict the present. Meaning, when he says I can't predict the present, what he means is things that are happening right now. If you look at markets right now and if you see dollar yen suddenly falling, okay, that's the present, that's not the future. And to explain that move, it's very difficult to do. That's what he's talking about, let alone what the dollar yen is going to do 2 seconds from now, 2 months from now, 2 years from now, okay? But Goldman is not in the business of doing the impossible. They're not in the business of predicting the future. They're in the business of thinking of every sort of scenario that could happen and being ready for it so that if and when any of those things happen, they can immediately respond. And when they do that, from the outside, it looks like they had anticipated that whatever event. But instead, what they did was they just contingency plan. They thought of all these, sort of downside risks, upside risks even, and then pull out the manila folder and they execute that plan, okay? That is how markets work. That is how your career and life will work, okay? So that's what I want to start with. And just to show you an example of what he means, this is not just a talking point, okay? I'll show you exactly how this is put in practice. Does anyone remember, is anyone from the U.S. at all? No? Yeah? Where are you guys from? South Carolina. Connecticut. Cool. You from the U.S.? No? Okay. I'm from New York originally. I used to live in Williamsburg, Brooklyn. Does anyone remember Hurricane Sandy? Hurricane Sandy was a pretty big storm that hit New York City, and it not just New York City, but New York, New Jersey, Connecticut, that whole area, and it wiped out the power. And it's kind of eerie to see, this is the skyline of Manhattan. And it's pretty crazy to see something like this, right? You've never seen like the entire skyline just kind of blacked out. The reason that these pictures had to be taken, like that right one, in the daylight is because there is no like city lights going on, as you can see on the left. That's what Hurricane Sandy did, all right? Now, on the entire island of Manhattan, of New York City, however, there was one building that happened to be lit up during Hurricane Sandy. Does anyone want to take a guess as to what that one building happens to be? Does anyone want to take a guess as to what company that is? That is Goldman Sachs worldwide headquarters. That is 200 West Street, okay? They were the only ones with power. Why? Because of contingency planning. Goldman has their own power that is off of any other grid, independent of anything, powered off of, I don't know how it works exactly. But they thought of this. They thought of a Hurricane Sandy. They thought of an entire, like Manhattan, like New York City, everything like grid system gone, and how to keep the building powered and fully powered, as you can see. This is not like some small, like trailer or something like that, okay? This picture is a very famous picture. This exemplifies exactly what Lloyd Blankfein is talking about. This is contingency planning, okay? This is right before the storm hit. That's the entrance to 200 West Street, and you can see that they piled sandbags all the way up to like here. And people were thinking like, I remember this, people were thinking like, what the hell are they doing? This is ridiculous. Well, look at the right side of the screen. That's why they did that. And you can see this flood and the level it goes to up on that car. I mean, they even like got that height correct, right? Goldman Sachs was not washed away in Hurricane Sandy. So, contingency planning, okay? And by the way, Goldman is not in the business of staying dry during hurricanes. They're in the business of financial markets, okay? This is like a side thing, but they have thought of not everything, but if this is how they operate just on like weather basis, imagine what they're doing in terms of financial markets and risk management, okay? What makes Goldman, and they're not the best firm, whatever, but what makes them like have that reputation is because, as Lloyd Blankfein said, they are the best contingency planner, and because they also know that they cannot tell the future. Other people might think that they can tell the future and say like, this is going to happen in the future, and I'm going to put a trade on. I'm going to allocate capital this way or that way. I'm going to do this and that, okay? Lloyd Blankfein is smart and not humble enough, but he's smart enough to know that you cannot let too much of what you think is going to happen dictate how you actually maneuver sort of markets. And again, this applies to all of your careers as well individually. All right, so who am I? That's the kind of how I got in sort of thing, right? It's because I stood out, right? I always talk about this word extraordinary. Extraordinary is a funny word because it's literally spelled extraordinary. You do not want to be ordinary, and you definitely do not want to be extraordinary, but you do want to be extraordinary. I'm not saying I'm extraordinary in like a pat myself in the back sense. I'm saying that I'm a weird, unique individual. Every one of you have your own sort of unique, sort of things. You have to figure out how to exploit that and present that rather than blend in like the Boston Career Forum sea of black suits and everybody is exactly the same carbon copy of one another. Now more than ever. All right, so that's basically kind of my career path. And I'll get into more of that later, but like it really overlaps with trading. We get to like sort of trading, markets, and all that kind of thing. In general, this is how I approach markets work, okay? If you're looking to, obviously you're looking to make money in markets, but obviously easier said than done. In a nutshell, it's kind of actually very simple in concept, not in practice, but in concept, okay? This is how I look at it. There are these four outcomes from a trade or investment. You could have a big win, you could have a big loss, you could have a small win, and you could have a small loss. And by big and small, I mean like the percentage of your portfolio or the notional size of it or something like that. Now, small wins and small losses, those will cancel each other out. So they don't really matter, okay? You made 3%, you lost 3%, they don't really matter. So that leaves these other two, these big wins and these big losses. And this is what makes a difference between Ken Griffin or a Steve Cohen or some other major, massive, legendary hedge fund manager who makes billions of dollars year after year after year after year, double-digit returns year after year. Paul Tudor Jones, here's what makes the difference. It's not the big wins. If you can eliminate big losses, then you're left with what? You're left with big wins. So investing, trading, I don't care if it's crypto, I don't care if it's a private equity deal, I don't care what it is. Your small wins and gains, they don't matter. Okay? They matter in the sense that, like, yeah, you can learn from them, and yeah, they might matter in a material sense. But what you really have to pay attention to is the left side of the column. And that left side of the column, the big wins, you cannot control that. Okay? You cannot control that because, remember what Lloyd Blankfein said, you cannot tell the future. Okay? Big wins happen by luck. Big losses, you can control if you mitigate them. If you can protect your capital, if you can risk manage, if you can stop the amount of losses that you have and preserve your capital, you will not have any big losses. And if you eliminate small wins, small losses, and big losses, then by default, at some point, you will be left with big wins. And when you have those big wins, understand that they are not a product of you getting those big wins, but that's a product of you avoiding big losses enough for you to stay alive long enough in the game to recognize those big wins. Okay? Does that make sense at all? Yeah. Okay. Trading losses. This is another thing I always talk about. Everybody gets the same markets in macro, okay? We all get the same USD JPY cross. We all get the same crude oil futures. We all get the same spot BTC, whatever it is. We all get the same markets. But then why is it that some make billions and others lose everything and then some in the same exact markets? It's because we're not trading markets. We are trading with or against ourselves. That's the differentiated factor amongst everything. Because the constant are the markets. Why do we have such a huge, disparity of outcomes on either end? And it's because it's not the markets that we're trading. We're trading with or against ourselves. What do I mean by that? I mean what you have to learn about in terms of investing, in terms of markets, more than anything else, is this. Learn who you are first and always. Okay? If you're new to investing, welcome. And by welcome, I mean welcome to the club. We are all new to investing. If we have 30-year-long careers in investing, every single day, we don't know what's going to happen, and therefore, every day, we are new to investing. Markets are extremely, extremely fair, if you think about it, because we all get the same markets. We don't know what's going to happen at the end of the day. So, every single day, we're all on kind of the same sort of starting line. I don't care if you're a hedge fund with all the resources of the world or if you're an individual investor, retail investor, or whatever. You don't know what's going to happen at the end of the day, okay? So don't worry about what other people know above you. Don't worry about, like you said, an edge that you might or might not have or that other people might have over you. Forget all that, okay? The biggest thing that you have to find out and learn about is who are you? And the only person that can answer that is you, and you might not even be able to answer that, and if you do answer that, you have to keep updating. This is what I mean by that. If you invest in a stock, okay, let's say this investment club, you guys decide that Toyota is a buy, and you think that there's 50% upside, and you did 5-year DCF analysis, and it's going to go up, and blah, 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 blah. And then Donald Trump gets elected, and he says 1,000% tariffs on cars from Japan. And naturally, it's Toyota, Nissan, all those stocks fall 60% in market open, okay? And let's say you guys just bought long Toyota just the day before with this bullish target, and the stock falls 60% down, day after day after day, limit down, limit down, limit down, and open 60% down. What are you gonna do? Are you gonna buy more? Are you gonna cut your losses because Trump is still tweeting things like we're gonna even do more and blah blah blah? Be patient. So the thing is that there is no right or wrong answer. But what you have to find out is, who are you in that scenario? Are you sweating bullets? Are you freaking out that that's happening? That is valuable information you need to know. You are learning that you are somebody who sharp losses is something that you can't do, and so maybe you have to outsource that to someone else. Or if you're the type who will look at that as an opportunity to buy long or buy into that, that might be something that you could use to your advantage, or if you do it sloppily, you could just keep buying into a falling knife and you can lose everything. Either way, you have to learn who you are because, once again, we all get the same exact markets. What you have to really learn is, who am I? This is something that I do all the time, too. Who am I in markets, right? My wife, for example, I made her start investing in crypto, kind of dollar cost averaging in. But I did that because, and I told her, like, it's kind of an experiment. I said to her, I want to observe what kind of trader you are. I want to see what happens, like, if BTC falls, like, really sharply. Are you going to be sad about it? Are you going to be depressed? Are you going to be bullish? All of that, right? Because I want her to find out who she is in markets. This is what all of you have to do. This is the most important thing, okay? You have to find out. And the way that you find out, the only way that you find out is when you have actual capital in markets, when you are an actual market participant. Not paper trading, not anything like that, but when your actual money is on the line and shit hits the fan, or if the stock gets short squeezed and you're up 50% in a day. Let's say you blasted through that Toyota target the next day. Are you going to take profit? What are you going to do, right? For me, the way that this is just personally to me, and so don't apply it to you because this is only for me. If I am long something, let's say an options position, and let's say it goes up 3x or whatever it is, my goal always is to protect my capital, right? Eliminate the big losses. So my goal is not to always like make a profit. My goal is to try to own whatever it is or have that position for free. In other words, I'm trying to get to a point where I can take my initial investment principal amount off the table, and that way I'm just playing with house money, and then I don't give a shit what happens, right? And it actually gives me sort of more flexibility, mental flexibility, to be able to withstand gigantic up and down swings and all that. But my primary goal isn't to like make X amount or whatever. My primary goal is to be able to take my initial capital off the table, get it out of markets, protect my capital, cross out that big losses, bottom left corner red box, and that will set me up for, at some point, hopefully, big wins. But those big wins happen because of that. But that's just me. That's not for everybody. You have to find out who you are, but you do that by actually participating in markets. Classrooms, reading books, seminars, all that, yeah, that's not helpful, but it could also be not helpful because it's going to give you false confidence that you think you're ready or whatever. No, just dive in. I don't care if it's with 100 yen. Pick a stock. I don't care what it is. Invest in it. Okay, you can do it commission free on like Monex and SBI and all that. Buy a stock, I don't care what it is. And when that stock goes up or down, don't judge yourself on the performance of that stock. Judge yourself on yourself. Observe yourself in that process. You have to look in the mirror, not at the trading screen. Okay, and you have to do that over and over and over throughout your trading and investing career. I don't care how many decades of experience you have. This is always going to evolve too, right? There are hedge fund managers who used to take a lot of risk, who could stomach it. Now they are almost like giant mutual fund asset management collectors, and they have very low volatility sort of funds, and they are now just asset collectors. And so they've changed their ways, right? That's what you have to do. That's what's the most important thing. Learn who you are first and always. Always, always, always. Career advice.
Okay, so I actually forgot to mention one of my key philosophies in this presentation under this like trading losses topic, so I'll just do that right now. So when it comes to like losses, trading losses, P&L losses, profit and loss, P&L, profit and loss trades. P&L losses in trading are not actually losses if you can have some sort of takeaway or if you can pull some sort of lesson to learn from doing that trade, right? If you can extract a lesson or gain some personal or technical insight, then the monetary losses aren't losses at all. It's tuition. It's market tuition. But if you don't learn anything new, or if you don't have any takeaway whatsoever, and then you're just left with the monetary P&L loss, then therefore it is pure and simple a loss. Okay? Always try to find some sort of lesson or a mistake or discover some personal flaw or I don't know, whatever it may be, but try to extract something out of it to not repeat again or to improve upon, to make your red and green, or in this case, red and red blinking ticker loss worth it, and never pay that tuition again, or pay less in tuition upon incremental improvements. And if you could do that, then by that approach, it's entirely possible for one to never actually have a trading loss. So market losses themselves, they're not only inevitable for everybody, but they are critically necessary, right? Nobody is immune from the wrath of markets, and the best traders with solid and consistent sustained track records have taken more trading losses than the rest of us. But they turned it into tuition, and that's why they survive onwards to become legendary. Okay, so this is a Michael Jordan quote that encapsulates this idea. And by the way, I don't know if this is a real quote or not. I don't care if it's real or not because it speaks volumes, okay? He says, "I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I failed over and over again in my life, and that is why I succeed." That is very powerful, but that applies to many things, and it absolutely applies to trading markets, okay? Like I said, the biggest and most successful traders have losses in terms of size and quantity that you wouldn't believe. Tuition costs, okay? The tuition costs are very real when it comes to markets. And the thing is that no matter how successful one may get in trading, there's never a time like where you're just done with paying market tuition. As in, there's never a time where you're now immune from losses. Losses will always be there. If you're going to be in the game and stay in the game, you have to pay to play. Okay? So it's a matter of minimizing the size and the frequency of tuition costs, i.e. that big losses, lower left-hand corner red box that I was talking about earlier in the presentation. Okay? So that's that one more point that I want to add about trading losses to the presentation. All right, folks, so there you have it. So I took that second topic of those three aforementioned, made a video of it, and I posted it to the Across the Spread Substack page to share with everybody. Because I figured that was the most relevant to the Across the Spread community. Because many subscribers are themselves already working in institutional finance, or they're professional traders or what have you. They're already in the game. So something like career advice, maybe not so applicable. But then, after putting that trading section out there, that trading commentary, I got an overwhelming response and requests to put the rest of it up there as well. They want to see the rest of my presentation. They were very intrigued. And I suppose that the other parts, particularly about my personal background, are actually very highly relevant to subscribers of Across the Spread, to you all, in order to know where I'm coming from when I make all this market commentary. And perhaps it might even explain why I have such a atypical, weird, differentiated approach and view on markets, for better or for worse. I think obviously for better. So look, I know that this is a very different type of content from what I usually do, which is market commentary. It's not personal matters. But if you enjoyed this, do me a favor, hit the like button and let me know. And then maybe I can incorporate or expand further upon these sorts of lessons or my own personal experiences in markets and in working in markets, if you care to hear them. If anyone has any interest. It certainly seems like it from my subscriber community, but that's because it's probably from my subscriber community. I have been having these kind of one-on-one discussions with my subscribers over the past few months in building out Across the Spread, just to get, kind of direct feedback, just to also understand who these people are on an individual level. Who are you on the other side of this screen right now that's receiving this, that's finding value in the content that I put out. Conversations have been fantastic. Thank you to each and every one of you who have done that. But in having these discussions, like many of whom have been following me since even as far back as my days at Real Vision, to my surprise, many of them haven't actually ever heard or have known my own kind of story of how I got into finance, despite me having talked about it multiple times on other podcasts and things like that. So I'm just testing to see if there is any interest out there for anything like that. If you do have any interest in hearing more about my personal journey or reflections upon that, let me know, hit the like button, and of course, make sure you're subscribed to the channel if you haven't been already. If you want in-depth market analysis out of Asia, check out my Substack and consider becoming a paid subscriber to support and build Across the Spread with me in this current chapter of my life and career, going independent and serving my core supporters, and a chapter in which I fully intend on having it be the longest and the last, right? And definitely the most fulfilling and most fun chapter thus far. Thank you very much to the Investment Club at Temple University for having me. And as always, thank you for your time. My name is Weston Nakamura on behalf of Across the Spread. We'll see you soon. Thanks. Bye.